Good morning, everyone. I'm Vinod Singaravelu. Many of you know me from our group, not all of them. So I'm Vinod. I'm a psychiatrist. I mentor people, train within my medical field, psychiatric field, also life coach and an investor in the stock market. And today's session is about my personal experience of going through this journey to reach where I am as an investor in the stock market. So this is the title that's been put forward, but it's going to be a story. We as human beings learn a lot ever since being a child by listening to stories, whether it's bedtime stories or stories that we heard from our parents or from teachers and everyone. And we have a story to tell ourselves. So this is about my story of so far where I've reached from where I'm from. And story time. So this is the story of the young boy, that is me, in the middle here on this picture. And I'm going to take you through how it started as being a playful boy and different perspectives he had, the PLAB exam, the UK qualifying exam for medical doctors, the problems faced because of his impatience, how people preyed on him, and how I prepared, practiced, worked on my psychology, and made further progress. So let's start from the childhood. It's a normal middle-class family, like most of us have been. Youngest of 3 kids. Dad was a businessman. Very playful, naughty young child I was. Parents, grandparents, relatives, as it is normal customary in our culture, used to give money for festivals and birthdays. As a young child, I didn't know how to use the money or what to do with that. So I just started saving it. My mom, bless her, I mean, she's no more with me, but she's a wonderful soul, and she doesn't like spending the new banknotes, the spanking new banknotes, and she doesn't like spending them. She only uses the old notes. So she gave it to me to safekeep it, and I didn't know what to do with it, so I saved it as well. So that's my early experience of saving money. Started there. We had a good childhood. We didn't kind of spend on anything expensive. We lived within our means. I and my middle brother kind of fought a lot due to sibling rivalry. You could see in this picture, he's much more handsome than I am, I think. And people liked him, and he's such a great person, very good academically and friendly and so on. So the sibling rivalry grew. So I wanted to be like him. I decided to copy what he does in order to be liked. So I observed what he does because he's good at what he does. So I learned from him and copied it. And people started liking me for that. And thereby I kind of developed a good pattern recognition. So if you do certain things, people respond in a particular way. So from then onwards, I started looking for patterns, human behaviors, and the response that they get, and developed that pattern recognition, identifying the kind of repeating patterns. And started learning from people who are successful in different modalities of their life. My dad's business was going well, award-winning businesses for multiple years consecutively. But then when he tried to expand, problems started to hit. Partnership problem, relatives who are partners and workers cheated on him. And from the top, we went to the bottom. The business was at the brink, at its brink. It was going to break. Ended up with quite a lot of debt because we needed debt to run the business, to run the family. So from riches to rags quite soon. No other source of income for our family other than this business. That's another kind of lesson I retrospectively learned, that depending on just one income is risky. Because if that goes, you can't predict what's going to happen in the future. If that income is sabotaged by some means, then we are at the mercy of the stars, isn't it? So debt mounted, every paisa mattered, every pence mattered. So savings, which I was doing in a very kind of fun way as a young child, took a completely different meaning. And the compounding effect was realized when the debt kept increasing in its size. So it's the compounding of the interest that we need to pay on the debt rather than the saving compounding. And then there was a point in my childhood where there was an urgent need for money immediately that day because of the debt issue. And then my mom didn't have money at that time, couldn't source it immediately. So it came down to me kind of to give that saved money, like 5 rupees, 10 rupees, things like that I've saved. And it amounted to 3,000 rupees that time, and it kind of helped in that critical moment. So I realized the importance of savings at that point. So the only other way I could help as a young boy to my family is to reduce all the expenses I can.
Can I just interrupt briefly? Nandu is waiting and to be approved by whoever is admitting. So he's just indicated that to me. Okay, sorry to interrupt.
Okay. So the only way I can further help my family is by reducing any financial burden I can cause to them. So I kind of put my head down, studied really hard, changed my schools from high fee paying to low fee paying, and joined the MBBS on merit rather than kind of depending on capitations, which my other brothers have had to do. So time rolled on. And we know, I mean, most of the audience are doctors here, so we know how the MBBS course go. So thankfully, by that time, my brothers started working, so they started supporting the family. And I decided to move to UK to expand my career, but also earn money to support my family more and take that responsibility of my parents who were struggling. But I had no clue how to come to UK, had no one here other than some of the senior colleagues from my college who I didn't have much of a contact at all. And this was around 2004 and 2005. And I think many of the audience in this group may have come to UK at that time, and you would know what the level of competition we had. So when I contacted one of my seniors here, he said, please don't come. There is 100 to 200 applications for one post. And it's not a great time to come at all. The time for Indian doctors to come to UK has passed. Don't come, settle in UK, he said. And that was so discouraging. So I went to my kind of cousin, who's a doctor in India, and I spoke to him about that. He said, well, if there is only one person who can achieve it, who can get a job, why don't you be that one person? Why do you focus on the remaining 99%? Do your best and be that 1%. And that was really motivational for me. So I thought, okay, let me be that 1%. And I took the brave step to come to UK. And well, I needed money to come here, right? So my dad took a loan of 75,000 rupees from LIC to cover all the expenses of being in UK, taking PLAB exams, and so on and so forth. And I had 8 months of being unemployed after the PLAB, couldn't find a job. And you know how expensive London is. So the money I had was fast kind of disappearing. Thankfully, my brother came here on site for his IT job, and I managed to kind of stay with him to save some money while applying for the jobs. So that's a godsend. So this is how my financial literacy, the learning about finances, started as a child. Now I'm an young adult. Decided not to repeat the same problems, same troubles that my father and my family had gone through, and wanted to learn various ways to create wealth and grow wealth. I read the book my brother had on Forex trading. So this is currency trading. It was a very well written book, simple to understand, easy to understand, and simple language. So I thought, this is really easy, much easier than anatomy and acid-base balance I had struggled for the last 5 years plus in the medical school. So my brother and I studied this one book, analyzed a currency pair. I can't remember which currency pair, this was a long time ago, this is. And then we formulated a trade plan, executed the trade, and within 15 minutes, the trade started to work in our favor. But then half an hour later, it started to pull back. And I realized, oh gosh, we made a mistake. The trade is going against us. So I need to change the direction of the trade. So previously I bought it, and now I changed it to shorting the currency pair. And then this was at night time. There's not much of a volume to move the currency pair. So I stayed in front of the computer screen for hours on end, watching the candlestick move up and down, and desperately praying that this moves in my favor. But deep in the night, I fell asleep. Next morning, we woke up and I realized I just lost £1,700 in that one trade because I didn't put any stop loss. I didn't know much about stop loss, but just reading one book. And this wasn't even my money, this was my brother's money. And I realized actually anatomy and medicine felt a lot safer than trading. I'm guessing that many of you listening to this may be able to relate to some of the experiences that I'm kind of sharing, because I guess many of the beginner traders follow a similar path. And my brother, who's such a great person, and he said, just do what you know best. He didn't say anything else. It was his money I lost. He didn't utter a word beyond that. Soon after that, I got my first job in UK. I felt on top of the world, and I never had proper paying job before. A little bit here and there in India, but this is my first proper job. So I went to my brother again and asked him for advice. How do I manage myself and my money? And he gave me some brief succinct tips. Know your money, spend it within your means, don't have any credit cards because that's not your money that you're spending. Automate saving. So once it is automated, you only have the remainder of the money to spend. So the saving becomes increasingly accumulated without you realizing. So I steadfastly followed this advice with a star next to it, because a few years later, I started having credit cards, but I paid them in full ever since. But for the first 2-3 years, I didn't have any credit card. And I started budgeting from the very first payslip onwards. Now, it says 14, but 14, 15 years now. So I have the budget ever since then, every month, every year, for everything I spend. So I know what's coming in, what's going out, what's my overhead, how much I need to spend the money, how much I need kind of emergency fund and things like that. Time went by, got married, and with that, of course, comes greater responsibility, at least from my perspective, that I should not fail. I remembered what happened to my father, to my family when I was younger. So I wanted to kind of invest and diversify my income source. So this was end of 2007, beginning of 2008. So I had no experience other than the losing trade in Forex. So I went with Indian shares and mutual funds because my brother, the middle brother, is in India and he's a financial analyst. So I thought, okay, I'll get some advice from him on mutual funds. So I started on Indian shares, individual shares and mutual funds in 2008. But remember, my knowledge at that point still is absolutely nil. It's just hearsay. Okay, ask my brother, what do you think? And then I see some news article on a web page, and then just blindly go with that. And the timing of entering the market is perfect, as many of you may know who were investing in India at that time, January 2007 and 8. So you can see on this page, so here, this was the time before I invested in India. From 2004 to 2007, end of 2007, Indian market had gone up by 400%. So I thought, okay, I can make money in Indian market. I did that. I entered the market right here, January 2008. Perfect timing, wasn't it? And then the market plummeted by 63% the following year. So this was the great financial crisis. But the urge to create wealth was still there. Life got busy, and then I realized, well, I don't know what I'm doing in the stock market. I might as well just go back to doing what I know best, which is medicine, psychiatry in my case. But I wanted to kind of create this wealth and secure my future. And this was the kind of journey I've been through. You invest, the stock goes up, the market goes up, and then you feel, actually, this is easy, and I want to get here. Invest there, then stock market pulls back a little bit. Then this is the usual journey that the new investor goes through, and that's why I put the slide here. Some of you may relate to this from your own experience. When it pulls back, you think, actually, the market is really good. I will double down on my investment, dollar cost average or whatever it is. So you kind of add more. You add again when it falls below. And then when it goes a lot down, you realize, oh gosh, what have I done? Why is this not going up? It should be going up. I have a way to go up. So the market should follow what I think. The market doesn't give a damn of what we are thinking, just do what it does. But I didn't realize that was the case. And I was hoping, praying that it will come up. And then many times, right close to the bottom of it, I will sell, thinking, I've had enough. This is too much of a loss. I can't take any more. I might as well save whatever is left. And then market goes down a little bit. And then you feel, yeah, I'm right. See what I said? It goes down. Thankfully, I sold. It comes up again. And you think, because I've sold, it should fall again. Then market kind of pulls back a little bit. And you look for the reasons to justify your decision. We always want to satisfy our ego, saying we want to be right. So we make a decision and then look for kind of biased views to confirm it. So confirmatory bias. So you feel, see what I said? It's come down. And then you, unbeknown to you, that would probably be the market bottom. Then it starts to go up. Then you question yourself, what is going on? Why is this happening? Oh gosh, I'm missing out because the market is recovering. And then right close to the top again, you feel, okay, now the market is clearly in the uptrend. I will buy again, right? You buy right again at the top, and it's very likely to be the top and comes back again. So you repeat the cycle of losing trades all over again. And this has happened to me as well as, I guess, maybe some of the other audiences as well. So that has gone on for a few times. The urge to make money led to me being desperate because I now have a family, a wife. I want to have children and family and want to kind of secure their future. When you're desperate, when you're emotional, you very rarely make wise decisions. And I didn't make wise decisions at the start. And I tried anything and everything that came across me, caught my eye, and I heard about spread betting, CFDs, forex trading, more of them. Considered binary option. Thankfully, I didn't do that. Would have certainly lost it. Option trading on stocks, and got kind of stupidly kind of fallen into get rich quick scam memberships, expensive memberships, pump and dump services, and many other costly, ineffective subscriptions I went on to, and I blew my account many times, regretfully. But they're all my tuition fees of what I learned from that. The one thing I didn't mention here is the lottery. Thankfully, I didn't spend too much on it, but I've done that as well. And believe me, I won maybe £25 all these years and spent much more than that. So I realized enough is enough. I'm not good at this. It is not working out for me. So I took a pit stop, like in Formula One race. And then went on to reflect on, okay, let's go to the basic and see what's going on. What can I do? And I remember the wise words from those well-wishers helped me in the past. My brother who said, do what you know best. My cousin said, why don't you be that one person? And I reflected on, sorry, there's a pronoun correction. I reflected on who I was and what worked for me in the past. I looked at my personal values, my belief systems about money. What did I feel about those people having money, wealthy people, rich people? What are the kind of impression, the biases I had about them? What are the kind of belief systems I had about creating wealth, accumulating wealth, and things like that? The skewed views I had about stock market, and the stories we tell ourselves about being rich, being poor, and things like that. All that mattered because that influences your decision making, your approaches, your perspective in life. And I also reflected on the financial habits that I had. Thankfully, they were good because with the help of my parents and brother, I developed those financial habits earlier on. excluding the expensive spend I had for the subscriptions. That was completely useless. Then started the financial freedom journey, looking at the saving money, started defining my goals in a smart way, like the specific, measurable, achievable, realistic, and time-bound. Simplified my life, increased my cash flow, mainly the expense savings and main income. I was still having just one income at that time from my psychiatry job. Reduced expense and managed many automated saving, eliminated debt in terms of credit cards and things like that. I never kind of left the credit card debt hanging beyond that particular month. I always paid in full. I have credit card to create a credit rating so that you are able to create a kind of credit footprint if you were to get mortgage and things like that. But I didn't want to pay any unnecessary interest to the banks. So I always paid it in full. So I've done small steps like that in order to kickstart my financial freedom journey. And then started exploring what else to do about this passive income and investment. So when I revisited the basics, these are the things that I highlighted in my previous slides as well. Know your money, how much you get as a household, how much you actually need, not the want, but how much you actually need. They're both two different things. The must-haves and the like to have kind of differentiation. Spend within your means. Credit card payment, I mentioned, automated saving, yeah. And I canceled all of the worthless subscriptions I had. I reflected on how things were, learned, and I repeated the cycle of reflection and learning. I've increased the income source. So once I kind of qualified, finished my membership exam, gone into a kind of higher level in my specialty, I started looking at other income sources, private practices, independent Section 12 assessments, and things like that. That a psychiatrist can do. So I didn't depend on just one source of income from the monthly payslip. So I kind of diversified different ways that income can come from. But it is still dependent on just me having to spend my time going to places, seeing patients, things like that. But different sources of income, which is much better than the previous situation. And because I know how much I need for the overhead, I'm able to save at least 6 to 9 months of my overhead into emergency fund. And then looked at steps to further my financial future, like appropriate mortgage and home and etc. So let's spend a little bit of time on this particular slide about the confidence and knowledge in a particular field. So it's, you could see the confidence goes up even when the knowledge is very low at the very beginning. When people have beginner's luck, they have a couple of traits that's going in their favor and they feel like, yeah, this is easy. I know everything about it. And then the reality kind of hits them hard and they realize that there's more to it than I thought. And then you go to a depressive state where I'm never going to understand it. It is too complicated. When you pursue the path, when you persist with it and learn more, improve your knowledge, then you realize actually my confidence has gone up. It is a bit complicated and I know what I'm doing because I've improved my knowledge, and then your confidence goes up as well. So I decided, let me go through this journey of increasing my knowledge and thereby increasing the confidence rather than depending on pure luck for my confidence. Why stock market? Having gone through the journey that I've done, losing a lot of money on different kind of trading and investing approach, why did I still went with the stock market? So you could see on this slide the major stock market crashes and drawdowns that has happened in the last 100 years, starting with the Great Depression in 1929 to for the subsequent 3 years. 85 to 90% of the stock market went down. So that's this one, right? And then there's another one here between 72 and 74. Nearly 50% of the stock market had crashed. So this is a logarithmic scale. That's why it's showing like that. And there is one day crash in 1987 of about 30%, 35% in a couple of months or so. And then in 2000, the dot-com bubble crash, nearly 50% crash. 2008, the great financial crisis, right? And many of us would have been in UK, and it's within our living memory, right? These two things. About 58% market crash. 2018 autumn, that's 25% of the stock market kind of pulled back. And we all know just this last year, coronavirus crash of 35% just in 30 days, less than 30 days. Within a month, between end of February and mid-March, the stock market has corrected 35% across the globe, not just in US. So despite all these major crashes and drawdown, why did I then choose stock market for my investing approach? And that is because of this. So if you look at long enough in the stock market, despite all of this drawdowns and crashes and bubble burst and things like that, in the last 100 years, this is just for the S&P 500 index, the US market index, without, there's a star here, so this is without the dividends. So just if you had invested $8 there, it's now at 33,822. So it's moved up by 43,300%. If you add the dividends to that, it's much bigger than that. And this is just one-off investment. If you're an investor periodically, it's exponential. So yes, there are drawdowns, but if you stayed long enough with a longer-term investment view in mind and have an appropriate knowledge-driven approach towards it, it is one of the safer ways to create wealth. People get really scared about flying aeroplanes, right? Or flying in an aeroplane, despite that being really one of the safest method of communication. I mean, unfortunately, just yesterday, there was a crash in Indonesia. A lot of people died. I'm so sorry to hear that. But despite all of those things, air travel remains one of the safest approach of travel. Similarly, despite all of these drawdowns and crashes, long-term stock market investing remains one of the safer way of making money if you know how to do it. And it's not impossible. So I realized, okay, I got the facts now. I know this is a good way of making it. How to do it? So I went into the journey of knowing more about it. I realized not everyone makes money. There are statistics about how new traders kind of lose money about 90% of the time and so on. Then my cousin's word came to my mind. Why don't I be that one person? If I know, I mean, I've already proved that, didn't I? When I came to UK in 2005, I was that 1% when I got the job. So I realized, let me go through similar kind of efforts, learning journey, so that I be this 1% of winning in stock market. So I observed people who do things well. Remember how I learned from my brother when I was younger to be liked by everyone else? So I observed others. I observed the successful people in stock market. So I imitated them. I learned from them. I learned the best from the best. Like Ekaleva in our culture, right? I copied from the best, not blindly, but I used it to then use my learning, use it as part of my learning. I read more and repeated it because I want to be doing what I know best. Stock market, it wasn't something that I knew best before, but I wanted to make it what I know best, right? So we don't come with all the knowledge in our mind when we were born in this world. I wasn't good at psychiatry when I was in year 12 at school, but I'm reasonably good psychiatrist now. That is because I put the effort in. I read and I practiced. So I thought, okay, let me do the same in stock market. So I went through the journey of knowing it so that I know I can do what I know best. I practiced in demo account, that's paper trading. I practiced in real money, subsequently dipping my toe and gradually building on that. There are lots of loss-making trades even now, and then that is part of the trade. You can't kind of do this without kind of, if you, profit and losses are two sides of the same coin. So I practiced it and developed my kind of trading style. Anything I've learned, I practiced it, put to test. And I experimented as I went along, and I kind of solidified, honed my kind of trading plans. So this is similar to one of the earlier slides, the journey that you go. The more you gain knowledge, the more your conviction and confidence grows in that particular process. I reflected, I worked on my psychology, improved my process, and that led to the progress. And that showed in my progress of the portfolio return as well. So there are so many things you can do in stock market: day trading, swing trading, scalping, position trading, medium term, long term investing, all sorts of things. The list goes in hundreds and thousands. So you need to identify which style works for you as an individual. And that's the journey I've been through to identify my style of trading and investing. I identified a niche market. I'm from India, live in UK, but I only trade in US stocks because that fits my personality. The time frame, am I going to work, have a trade for 1 week, 1 year, multiple years, or just a few days? So different time frame works for different personality. So you need to identify what fits your personality, what works for you individually. That's what I did for myself. Ways to access stock charts to fit my personality. So again, there are hundreds and numerous kind of ways of analyzing a stock chart, different indicators, different technical analysis. I don't want to complicate my life, so I wanted to keep things to be really simple. So I looked at just a handful of approaches to analyze the stock chart. That works for me, and I'm sticking with that. And that works fine. You don't have to kind of have too many lines in the stock chart to succeed from it. All we want is to create wealth, right? Not to look smart or kind of brag about it. No one cares about that. All people care about is whether you're successful in what you're doing and whether you're making money for your own life, right? So I developed a process, and I continue to improve on that psychology of trading. Humans are emotional beings. Emotions always kind of come and kind of challenge you. When the market goes up, you fear about, should I take profit? Because what if comes to your mind, right? What if the stock that's gone up comes back? I might lose all the money. So you need to be aware of those emotions. And if the stock goes down, you kind of think about, if I held longer, maybe it will come up again so that I will break even or kind of make a profit. I don't want to make loss in a trade and things like that. That's the ego talking rather than any sense talking to you. The stock market is not about satisfying your ego. It's about following a rule, following a process, because that is what will save you. That is what will help your portfolio to grow. So being aware of the emotion and working on our psychology is a fundamental process of succeeding in this trade. And when I started to do that, the result followed suit. And this experience has helped me realize what I've always known from Bhagavad Gita. So I just wanted to play this audio to you, if I can get my cursor back. How do I get my cursor back?
कर्मण्येवाधिकारस्ते मा फलेषु कदाचन मा कर्मफलहेतुर्भूः मा ते सङ्गोऽस्त्वकर्मणि.
Many of us would have heard this sloka from Bhagavad Gita, which roughly translates to, do your duty, but do not concern yourself with the results, right? And I've taken it I realized this when I followed the process, the trading process, the psychological process, and the trading plan once I devised that. When I followed it without expecting to make money, like without expecting I should be making £500 a month or £100 a week or whatever it is, right? If my focus is on the money, I kept making losing trade. But when I started focusing on identifying the good trade entries, risk management, following the profit targets and stop losses and things like that, the results followed itself. So I realized when you focus on the processes, not on the product, you ended up with the product anyway, and in a better way as well. Hope it makes sense. And so although the results were positive, I still had a conflict within me between investing and trading. Investing by its very definition is long-term, years, not months or weeks. Trading by definition is much more shorter term. And there are different types of trading, right? So I had this kind of impatience. My fingers are a bit twitchy. I wanted to make some trades. But at the same time, I realized staying in the market for long enough will give me the bigger results. So it's never about timing the market. It is time in the market. But I had this conflict within me. I know the data suggests investing is better rather than trading, but I had this conflict. So what did I do? I need to have a system that works for me, right? I can't follow someone else's system if it doesn't apply to me. So I kind of dabbled with various approaches and then figured out I'm neither an investor nor a trader. I'm in fact an invader. This is a made-up term, which is a combination of investing and trading. So I started using the trading philosophy, trading approaches, identifying the stock chart entry exit signal, and then mixed it with the investing approach of identifying great companies with good fundamentals and getting at the opportune times and getting out and thereby compounding my return. So this is what I do now. If someone asks me whether I'm an investor or a trader, I'll probably be saying I'm an invader. So it took a good few years for me to go through this process and reflection and execution and things like that. While I was going through that learning process, I tried various things, and this is how my portfolio looked at. So the yellow horizontal line is the zero line, or the total starting point. It went up, made some losses, went up, made losses, went up, made losses, came back, went up, made losses, and came back. So this is, as you could see, this is January of a couple of years and 2.5 years or so. So I thought I'm doing something, but I wasn't doing many things properly at all because the portfolio pretty much stayed stagnant. Ever since I started focusing just on the process, the product then revealed itself. And this is how it turned out to be. So within the subsequent year, my portfolio gave me a good return. And this is despite me trying to be an impatient and limiting some of potential profits by selling too early. So how does this compare? I took off the kind of the numbers on the side because it's not about how much money I made, it's about the proportionality. So let me compare it with the Dow Jones Index, which is one of the commonly followed index in US that gets frequently mentioned in the media. So Dow Jones Index gained 66% since the March coronavirus crash low. And this is until the 16th of December when I took a snapshot of the slide. And it reached a historic $30,000 price. So from this bottom to here, it's 66%. And for the whole year, and you can see my portfolio is kind of handily beating that. And for the whole year, I think Dow Jones finished at 7%, and that's a slide later on that compares the portfolio with other indexes as well. I'll come to that in a second. So the niche market, which is US market, growth stocks, that's my kind of area of expertise. And I choose different tax beneficial accounts like individual saving account, stock and shares. And I also use similar approaches for my kids' account as well. I created accounts for them in junior ISA, and I invest for them because I started quite late in my life. And they can start now and compound over a period of time so that by the time they are young adults or reach adulthood, they'll be in a much better financial state than where I was when I reached my young adulthood, right? So I started to do that from the very first year, from the very first few months after they were born. And I also have a separate trading account where I actively trade, swing trade techniques there. And I continue my financial freedom habits that I mentioned previously, and and it's working well. And I'm moving to the fast-paced, fantastic growth opportunities in the US tech-based companies because that's what I want. I want my portfolio to grow. People kind of sometimes stay away from growth stocks because they think it's some kind of imagined risk. Why would you not want your companies that you invest in to grow? And if the company grows a bit faster, it's called growth stocks. That is the company I want to be invested in because I want my investment to grow faster rather than kind of aiming for slow growth kind of dividend paying companies. Dividend investment is a very good strategy. I mean, believe me, I'm not against dividend investing. It's completely different pace and takes a different learning. But this is what suits my kind of style better. So, and I use a trade log, a version of this. This is an older version. I use an online version now to keep track of my trading. So I put what trade, why I've entered, at what level, when am I exiting it, what's the reason, so I can reflect and analyze the trade after completing it. Thereby, you keep on top of it, learn from mistakes, and learn from your successes so you can repeat it more. And this is an important step to reflect. As doctors, we had supervision on a regular basis while training. We have appraisal on a yearly basis. That has to be a similar method to keep us on track with trading and investing as well. So I create, so how do I approach identifying the stocks? It's like employing someone to do a job, right? You create you advertise, you create a long list, you kind of filter them through to your short list, you interview them, good performers or them given the job, and then the candidate then chooses or not chooses. Even after employing them, you assess their performance and either sack them or give them a raise. And I take similar approach. I create a universe list for stocks that are in good companies, and then filter them through various parameters to get a short list, watch list. And then I observe the watch list to see if they're acting very well, like an interview process. And if they are really acting really well, I give them the job. I invest a little bit of money in them to see if they perform even after that. I would want the stock to prove to myself, to prove to me that it deserves more money from me. If it starts to act well, I invest a little bit more, and I periodically assess its performance, right? If it's not performing well, then I close the trade, I exit the trade. I don't invest anything more on it. So that's the approach I take in identifying the stock and investing in it. And you will have your own style. You might be able to share my watch list, but in terms of the interview process and shortlisting and observing it, you would have to be able to do that. And I can keep continuing to focus on my psychology and disciplined trading execution. I'm conscious of time, so I'm going to press up a little bit faster. This is what I explained in the previous slide. So how does it look in reality? So this is just a stock chart. I've shared this in our groups before, so I use the same chart so you are familiar looking at it. So I look at the chart. This was in my watch list for a good few months because this is a company that is in the 5G field, right? It creates semiconductors, I think, or some kind of computer components or phone components on 5G. So I kept it on watch list. I put some indicators, and it kind of broke out of that indicator with good volume. So I buy here, and I kind of shared with my members as well as this trade. And when you have a good analysis like that, your majority of the time you end up on the positive side. Some trades kind of go against you, and you hit a stop loss. That's fine. That is why you have stop loss. But when you follow a particular trade plan and these technical analysis, majority of the time you end up winning. And this trade did so. Within 4 weeks, it moved 76%. And then there is another great start. You can see that from March low onwards, it moved quite a lot, from about 300 to over 1,000, and then it went sideways. So I previously kind of sold this stock somewhere here, and then kept it on my watch list to observe whether it's acting fine. And it started to act a little bit positive here. So I entered a small trade, and then in a month's time, it moved up 25%. Right. So in this chart, there is no indicators, technical indicators there, just to keep it clear for your view. And then I analyze the trade with various technical indicators to give me the trade signal. That's why I entered in the blue arrow mark. This is the chart near, which we have shared with our colleagues in our group as well. So just to give you an example of how I analyze trades, how I pick up the stock, and things like that. So the red box here, so that's the confluence of moving average. I put the stop loss below that. If anyone is interested, so I did a swing trade on this one, and the stock came back down and hit my stop loss. So it didn't go up straight from here. It hit the stop loss when it pulled back a little bit. And then it went up again. And then I bought the second time and made some money, and I sold out of it. It's still acting fine. So there are some risky trades like that, and that is fine. That's part of the game. So because I started to work on my learning process and improving my knowledge, this is one of the things I started to know more about than before. So this is what I do now, because I know what I'm doing, and I'm doing what I know best in trading, as well as investing, as well as in medicine. And then I realized what else I did I do when I was growing up. So I studied hard at school, but I also taught my friends what I studied, which helped me and also helped them do well in exams. When I joined MBBS, I did the same thing. I studied hard and well, topped in many subjects, but I also taught my friends and juniors about it, and they benefited from it. In postgraduate studies, I taught medical students. When I qualified as a consultant, I taught my junior doctors. I teach, supervise, appraise other consultants, and also mentor new consultants in my job. And I realized I always taught what I've learned to others in order to help them. And I wanted to do the same in the stock market investing as well. I've been through over a decade of this experience of ups and downs, burnt my fingers and all that, and done a lot of kind of studies and reflection. And I wanted to share that with others. Am I an expert? What is so special about me? Just to clarify that, I'm not an expert. This is just my pure personal experience of what I've learned, what works for me. And I know that it can work for others too. Once you know your way, you can be successful to grow wealth. I'm just passionate about what I do because this is what I want for my future, for my family's future. And I know from speaking to so many of my colleagues, that's what they want for them and their family as well. So I thought I started doing this because I'm good at pattern recognition. I like teaching. I like helping and mentoring others. So I combine all of those things and my stock market kind of experience to share with other people. This is just to give you an idea of how the portfolio is performing just on a month-by-month basis. So this is not the whole portfolio. This is just the month-over-month profit and loss return, not the whole portfolio return. But these are the returns from the S&P 500 index and the NASDAQ index in the last few months. I didn't track these before, so I only have data from June onwards. In 2020, the stock market did fantastically well. A lot of people made money. Anyone could have made money, I think. So me making money last year is not an issue because market did really well. What I like about what I did last year was I got much more disciplined in my trading plan, and I stuck to that rather than kind of leaving it to chances and luck. So the historical stock market average is about 8 to 10% per year if you look at longer term. So from that point of view, the overall market did much beyond the historical average. And this is how my overall portfolio performed after taking the commissions, currency conversion charges, everything into account, because I trade with the GBP, the pound account in US stocks, which are traded in dollar. So I missed out on quite a lot of currency conversion charges and fees. And this is including those things, the overall stock market portfolio returned 58% compared to the overall index. This is just for 2020. So if I can do it, you can do it too. This is one of my favorite movies, Kung Fu Panda. And there's a secret soul and there's a secret noodle sauce, right? Secret sauce of secret noodle sauce. Have you heard of that? And if you watch the movie, you would know there is no secret ingredient. To make something special, you just have to believe it is special. I did it. I'm doing it. You can do it too. You have to believe in yourself. Keep your eye on the price. But be ready to put the effort as you have done for your university degree with the same dedication, commitment, and effort. Because if your medical practice, the effort that you put in your university degree gives you a living from it, you can make a living from the training too, provided you put that effort. There's no free lunch. No one is just going to kind of hand over the money to you. but you can create your wealth once you put your right effort into it. There is this kind of New York Times bestseller book, Outliers, which talks about the magic number of greatness is about practicing for 10,000 hours. And it is no different to what we did for MBBS. So 10,000 hours is about 8 hours a day, 5 hours every day in the week for 5 years, which is what we did for the basic medical degree, right? We weren't masters at the end of the MBBS. We did further postgraduate qualification. So you could realize what is necessary to reach that level of greatness and mastery in order to create greatness in investing and trading as well. It is achievable. The question is, though, do you want to reinvent the wheel yourself if there's an easy way of doing it? You have to do your work. There is no shortcut to that, right? Because you need to work on your psychology, your own trading plans, and things like that. That is absolutely necessary. There's no shortcuts. But whether you do the whole reinvention of the wheel yourself, or you do something like I did, learn from someone who's good at it, copy from someone the learning process, copying the learning process, not the trades, copying the learning process from someone who's done it, who you can relate to. So that's what I did. It works for me. If that is what you want, go for it. But don't blindly copy the trades from others. Have a system that works for you. If you need any help, guidance, or coaching on this, oops, what happened? I can help. I've created the WhatsApp group. Now we are moving to Telegram group as well to share ideas and thoughts. And there are so many requests and to individually speak to people and give them various learning points and things like that, which is beyond manageable to do it individually for hundreds of people. So I created this page where I share my thoughts and views and ideas, financial wisdom, trading wisdom, market wisdom, and all sorts of things. I also offer mentoring, which some of you have accessed and found it helpful for exclusive access to further membership, further kind of insights to watch lists and things like that. There are options available for there as well. So if you want a bit more of a kind of hand-holding type approach, it is there for you to use if you wanted it. I don't want to kind of make it too commercial or anything, so that's why it's kind of buy me a coffee if you feel like kind of thing, which is small donation. I just want to make a disclaimer that this is purely educational, not a trade recommendation service. It's not buy or sell. I share my personal thoughts, my lived experience, and I sometimes run training webinars on understanding stock charts and things like that, and to help you learn the techniques of the trade, right? I cannot give you financial advice. I'm not a financial advisor. If you want personal financial advice, of course, you go to the qualified independent financial advisor. And remember, the stock market, I mean, we have to say this legally, right? So stock market can go up and down. You can make losses. The capital is at risk because it's an educational kind of approach. It's not stock trading recommendation service. I'm not registered with FCA. I just want you to be clear about that. So if you ask me, can I buy? Would you advise me to buy or sell? My answer will be, well, what does your trade plan suggest? But I can talk about what my watch lists are talking about, highlighting, right? So these are some of the things that you can access from the GrowWealth page. And members get weekly watch list. Very briefly, this is very much in infancy. I've just started this page last month, and every week I put on a weekly watch list of a group of stocks, and this is a comparison of how they have performed a week later and up to now. And sometimes if there is really good setup that comes up that catches my eye, sometimes I publish focus list as well for members, and that is also performed in this way. There's no guarantee that future performance will be similar to the past, but this is how it has been so far in the last month. I wanted to know whether people like it or not. So I did a recent survey with supporters and members who have used it. So this is how people have responded to it. 60% said it's been useful, informative, or somewhat useful, 20%, 80% would recommend this to their friends. And they also made some kind of comments like, the posts are honest and authentic, gives me information about what's going on in the stock market, which I don't have time elsewhere to read, and things like that. And some of the other comments here. Okay. And members who have followed the post on the WhatsApp group and from the GrowWealth page as well have written to me saying some of these things. I'm sitting on 40% profit, £800 today if I sell these 2 stocks. And thank you for the mentoring session. It was really helpful, and things like that. So these things kind of really motivates me to keep going, because I wanted to help, and I'm sharing my thoughts and views and realizing that actually people are benefiting from it. It does take quite a lot of time and energy and effort from my part. And that's why there's a token subscription for some of the service, not for all of them, just for the membership. Quite a lot of the page is completely free. Just the membership is a tiny amount because of the IKEA effect. If we do something that we have put our effort and invested either our time or effort or money in it, we love it more than what we would have got it for free. And that's been proven. It's a proven psychological effect. So the subscription is a tiny amount for the amount of effort that I put in in order to get people who are committed and motivated to creating wealth and growing their wealth. But if you don't want to, you don't have to. There are lots of kind of free resources out there. Even on the GrowWealth page, a lot of posts are free, you can access. But if you feel like you want to appreciate, you can contribute. And now we're also kind of moving to the Telegram group where we have a shared learning experience. These are the links to the Telegram group and the GrowWealth page. And when I created this GrowWealth page, there was the introductory kind of membership fee of really tiny amount of £10, which was going to expire by the end of the year, last year. And it did. But before then, Anup and Vivek had contacted me for this presentation. So I thought, as a special thanks to the organizers of this webinar, I thought I will extend that kind of special offer until end of this week, when it will go up slightly, by a small amount, actually, but not too much, if you are interested in it. So thank you. Hope it was helpful to share and see the path I've taken, the pitfalls I've kind of fallen on to, and the learning journey that I've taken. And if there is one point I want you to take home from this presentation, it is to realize you can do it too. There is no secret sauce. If you know and be prepared to learn, you can do it. And happy learning, successful investing, and I'm happy to help you if you want me to help you in your process. Good luck.
Thank you, Vinod. Thank you very much.
Request Dr. Vinod to please take over question and answer session. And my understanding is that the recording continues to stay on. Thank you, Dr. Vinod.
So thanks, Vinod. Thanks, Vivek. I will read some of the questions which are in the chat box, which we can go through very quickly. And then after that, if the members would have any more question, please unmute yourself or write in the chat box. So I will go with a few questions very quickly. Mohammed has asked about which book and the name of the book, if you would be suggesting any to read, please.
I mean, looking at the timestamp at that when he messaged, I was wondering whether he was referring to the book I read for Forex trading long time ago.
Yes, that's correct.
Yeah. The clue is long time ago, so I don't actually remember the book, but my wife has the name somewhere recorded, or maybe a PDF or something. So I have to check on that. Maybe I can get back to you on that. I don't remember that book right now. It was my brother's book. I don't have it. But it was a very, very useful book for Forex. But if you also have the other allied healthier trading rules, it's a very effective one. My performance following that trade is not reflective of the quality of the book. Just to say, maybe I can get back to you somehow on the name later on, if that's all right.
If I may ask, please, I mean, the thing is that I know that was quite a few years ago now. You might have read a more recent book that you might suggest. That's all I wanted to ask.
Okay, that book was primarily on forex, forex trading. There are lots of books I have read about various things, psychology, general about stock market and things like that. So you probably need to have a wider exposure to those things. So I would suggest looking at something on trading psychology, something on stock market itself, and something on your trading style. So if you're looking at investing, you need to go for a book that's aimed at long term. If you're looking at trading, so looking at trading techniques type of book. I don't know which one you have in your mind for your style, Mohammed.
Sorry, I mean it was a just generalized question because I'm very new into this, so that's all. Yeah.
Okay, if you aren't in one of our groups, I posted my Telegram group, which is free group for all of us. So why don't you join there, and we will be sharing the names of the books, good resources, and I'll pin the post as well, so it'll be on the messages for anyone to see later on as well. So thereby we kind of capture quite a lot of big lists rather than me going through some and kind of missing others, if that's all right.
Thanks. Geeta has asked about how do you decide the level of stop loss?
Yeah, thanks, Geeta, for the question. So stop loss again depends on your trading style and the risk tolerance. So for swing trading, if I do a shorter term swing trading, I have my stop loss somewhere between 3.5% to 5%, and that is because of my risk level and also my account size. For longer term investing, I don't have stop loss because it's long term, multiple months and years. But then I keep a watch on the longer trend. For instance, the long term trend is considered as going up, uptrend, the bull market, if the stock price is about 200-day moving average. It's considered as downtrend. This is generally speaking, if it breaks down below the 200-day moving average. So I might have a rough kind of mental stop loss for longer term investing around 200-day moving average, or sometimes 50-day moving average, depending on how frothy or bubbly the market is. But for trading, medium term or swing trading, I aim for somewhere between 3.5% to 5%. The Investor Business Daily, William O'Neill kind of company, I've shared their videos, YouTube videos before in our group. They talk about no more than 7%, somewhere between 7 to 8%, and that is in the context of how much do you have to gain back to break even. So if you lose 7%, you have to make roughly 7% or 8% in your next trade to break even. But if you lose 10%, I think you had to make 11 or 12% to break even in the next trade. If you lose 50% in this trade, you have to make 100% of your next trade to break even because of the compounding effect. Does it make sense? So if you have 10 pounds and you lose 5 pounds, you are left with 5 pounds remaining. So the 5 has to double, 100% increase to reach to break even 10 pounds where you started. So that's why it's important to have a stop loss somewhere around 7% or 8%. So the next trade, if you gain about 7% or 8%, you're coming to break even. So you don't have to kind of aim for too big a kind of super performance trade to break even. Bigger losses kind of eats into your capital. In any trades, there are 5 potential outcomes. Big wins, small win, break even, that is closing the trade at the same price as you entered. So you're not making any profit, you're not making any losses. And then small loss and big loss. All of these 5 are potential outcomes. You can't control the outcomes, you can only manage it. If you get rid of the big loss, that will do immense kind of benefit to your portfolio. So if you have a small loss, but you're also having a big win and a small win, that will take care of the small loss. And then it eventually accumulatively increase in size. So in order to avoid big wins, have a stop loss like what I suggested, depending on your risk tolerance. If you're really risk averse, then you should have a stop loss like 5% or 8%. If you're aiming for swing trading and a shorter term few days trading, good entry is important, because that's when you can get a good setup for stop loss. It has to be based on the price action, because stock market goes up and down even within a day. If you put too close a stop loss, even within a day's fluctuation, it will just close and you will frequently end up losing it. So it has to be based on the chart pattern and price action. So entering at the right level so that you can aim for somewhere between 3.5% to 5% in my case, or if you go for IBD, kind of investor business daily approach, somewhere around 7% is a reasonable kind of approach to have. Hope it answers your question.
Thanks. The next question is, the money generated in trading, is it considered income or capital gains?
If you're doing trading quite a lot and you're generating quite a lot of money from it, considerable amount, and that can be sometimes considered as income, but primarily it'll be capital gains for majority of us who have a primary other source of income, like the monthly payslip that we get from our job. This will be considered as capital gains. But if you are also claiming expenses for the computers that you buy for trading, or various software programs and things like that, and trading on a daily basis, and if you can evidence that, then if the money is a lot, then the government might come back to you saying, well, you're trading so much, because you have to show it in your HMRC tax filing anyway. So you're trading so frequently and you're earning this much amount of money on a yearly basis. So we consider this as income. So they could come back to you like that. But for what I am doing, mine will be considered as capital gains to my extent. I'm not doing day trading or anything like that. If you are, then it might be considered as income. But for majority of us, I would assume that will be coming in the category of CGT for that.
Thanks. The same question as Mohammed, any recommended books or website for the starters?
Yeah, well, GrowWealth page, if you're interested in starting. Investor Business Daily is a good source as well, website. So for fundamental analysis, to understand how to value a company, how to find good businesses and things like that, this book is a really good book, The Intelligent Investor by Benjamin Graham. So a lot of people know about Warren Buffett, acclaimed investor, one of the wealthiest men in the world in US. He lives in US, but he's one of the wealthiest in the world. So he considers Benjamin Graham as his teacher. And this book was written nearly a century ago, but it is still highly, highly relevant. So that's Intelligent Investor. If you're interested in kind of technical analysis, chart analysis, and want to read quite a lot of it, this is a good book as well. Technical Analysis of the Financial Markets. Quite a big one. There are a couple of other books as well, which I can only share later on. It's not on top of my head right now. But read generally about good financial habits. There is a book called Two Income Traps. So those of us who have both the parents, the husband and wife earning, because they have this kind of monthly income coming in, and we sometimes may not necessarily think in terms of, okay, how much we are saving for future and things like that, because we have the money coming in. And God forbid, if something were to happen, furloughed, lost job or sickness and things like that, suddenly a source of that income is stopped. So we kind of get caught in that kind of two income trap, because it's not always going to be two income. So that's a really good book, which can I share? So that's The Two Income Trap by Elizabeth Warren. And it talks about the trap itself. And they've written a second book to identify how to segregate your income in order to automate savings and things like that. And that title is All Your Worth. Again, the same author, Elizabeth Warren and Amelia Warren Tyagi. I spoke earlier about Investor Business Daily, William O'Neill, and That's this book he's written, How to Make Money in Stock Market. A lot of traders use this book and consider this as one of the Bibles. So if you're serious about trading or invading like I'm doing, this is a good book. How to Make Money in Stock Market by William O'Neill. I hope that gives some idea about where you can start.
Thanks, Vinod. A question from Ram. Could you advise which platforms are good for starting investors?
Well, in UK, I mean, if you haven't used the tax beneficial systems like ISA, I would say that's where you should start looking at it, because any capital gains, any dividends you get from the company will be tax-free on ISA stock and shares account. So look for, there are various ones, HL has it, Interactive Investor has it, I think Vanguard has that, but they invest in their own funds. So it depends on what you want to use that account for. If you want to go for passive index funds, some kind of passive funds like what Vanguard would offer. So Vanguard offers their own ISA account, I believe, but you can only invest in one Vanguard's funds in that account. If you want to have a little bit of fund, a little bit of ETFs, a little bit of investment trust, a little bit of stocks, all of that in one place, then accounts like Hargreaves Lansdowne HL or Interactive Investor, those can be quite helpful. Those are the ones I know of. I personally use Interactive Investor. I know Free Trade or Trading 212, or also newer ones that has ISA account with less fee. So fee is one of the things that you would have to consider. A lot of fees goes into trading. Interactive Investor has a fixed fee approach. Hargreaves Lansdowne, I think, has percentage approach based on your portfolio size. For newer accounts, percentage is not a big issue, but of course we are aiming to improve our wealth, and we are all mostly high net worth individuals, so we'll probably be putting more money. If it goes beyond 70,000, 80,000, then you'll be paying more in fees if it is percentage based rather than fixed fee approach. So based on your portfolio size, what kind of investment vehicles, financial products you want to invest in, like I mentioned, funds or stocks and shares, you'd have to look around on different platforms to see if they support and how much fee that they charge. The other thing to consider is how actively do you want to do. Like for instance, Interactive Investor allows you to have stop losses, allows you to have limit orders. So you can predetermine when you want to get into the stock, when you want to get out, and put that order and not kind of stare at the computer all the time. Some of the brokerages firms may not offer that, and they may be cheaper, but they may not have that facility. So you'll have to shop around to see what you would like to have for your style.
Vasudev has raised the issue on, is it not important to first identify your risk appetite before undertaking financial journey, as your advice is relevant to a high risk strategy?
Okay, I'll break that question into a couple of steps. The first answer is yes, you need to know your risk appetite. When you cross the road, you need to look left and right and make sure there is no cars coming up. So that is the risk approach. But I would disagree that it's a high risk strategy. If you cross the road, that's not risky because we know how to cross the road. If you let your 2-year-old cross the road without any adult guidance, then that is risky. So crossing the road is not risky. It's about who does it, right? There may be many surgeons here, so you can't say a knife is risky because surgeons use the knife to save life. But in a child's hand, it is risky. So the risk is based on your knowledge. So once you know how to manage it, improve your knowledge, how to make use of the tools that you have, then as I mentioned earlier, this is one of the better managed risk facility, right? If say you invest in a stock, you did an analysis or you blindly followed somebody, whatever, you buy a stock and then it turns south, it goes back, it goes down, and you feel like you made a mistake. what do you do then? Just get out of the stock, right? Don't make a 5% loss into 50% loss. Just get out. If you're worried about what happens if my stock comes back again and goes up, well, if the stock shows that if the stock chart shows that it's coming back and uptrend is confirmed, get back in. Don't ever kind of look at satisfying your ego. Your ego wants to make you feel like I'm right, I made the right decision, and then things like that. The stock market doesn't give a damn about it. It does what it wants to do. And your intention is not about feeling right. Your intention is to make money or create wealth. So you enter a trade, of course, with the right kind of analysis of the company and the chart, but without any control on the outcome. Great companies can have some poor performing stock years, right? That can happen. You don't have any control of that. But if your trade is not working in your favor and you want to protect your capital, just get out of that. If it has started to work in your favor, get back in, right? You can't ever make always the right decision or always the profitable trade. There will be losing trades. Whether you kind of make that loss into a kind of a devastating portfolio damaging loss or not is completely within your hands, right? And from that point of view, this is one of the better risk managed approach. I struggle with, Anup is great with property investing and I am not, because I feel property is not in my kind of comfort zone. I don't have that much of knowledge, and I fear I have a property in India which has gone down by 50% because of various kind of builder-related issue, which is completely beyond my control, and I can't sell it because there's not buyers coming in, and I'm sitting with 50% loss. If that were to happen in my stock, for instance, I can sell it, use the money to invest in something else. So that's how I see it. That is my risk appetite. I'm not saying property investing is bad. There are a lot of people like Anup and other people who does it fantastically, lucratively. But this is my kind of risk appetite. And I like that kind of control to immediately have access to my kind of account if I want to kind of limit the losses. So it's not high risk strategy if you know how to manage your risk. But of course, people have to start reflecting on their risk appetite first. I agree.
Thanks, Vinod. Amit has also asked about what are your thoughts or experience with Vanguard life strategy funds as a starter?
Wonderful idea. Anyone who haven't had any investment at all, and thinking about investing in anything related to stock market like mutual funds, ETF, or investment trust, start with a passive fund, right? Even Warren Buffett, he said his wife's account is primarily kind of index funds or something of that sort. I'm paraphrasing him. So have at least 10 to 20% of your investable kind of capital in a passive fund like an index fund, right? Don't go with kind of what is being talked in the media, the high flyer mutual fund manager and things like that, because I've kind of lost some money with Neil Woodford's fund, like many of our members might have been as well. But index fund follows the overall stock market. And Vanguard Life Strategy Fund is a fund of funds. It's not just about one particular stock market. It's not like FTSE or US market. So Life Strategy has funds or multiple index funds within that Life Strategy Fund. And depending on which percentage that you choose, they have, I think, 40, 60, 80, 100%. So 100% will be all exposed to different index funds for stock market. If it is 80, then 80% will be on stock market stocks, funds. The remaining 20% will be like bonds and things like that. So depending on your risk appetite, what you want, like, it provides that, it kind of provides you that diversification. And Vanguard, somewhere I read, Vanguard is probably one of the underappreciated kind of efforts by any single individual to create wealth for the majority of the people in the world. The fees are so low, and it kind of allows us to have that exposure in stock markets. So something like Life Strategy Fund Vanguard is a fantastic place to start if you're starting brand new.
Thanks. Ashwin is talking about, do you invest in a startup or only established companies?
I do both, but only if I have some information about these startups. Not blindly from my learning. So yesterday, somebody was asking me, do I invest in Signal Advance company? Because there are lots of kind of people are moving from WhatsApp to Signal now. So there was a company called Signal Advances, I believe, which went like 1,100% in 1 day or 2 days, which has nothing to do with the Signal app at all, except for the name. So people kind of completely get mixed up. So just because the stock is kind of shooting up doesn't mean it's a good company. I do invest in some IPOs after it come to market, but not a lot. It will be a smaller amount. Majority of the investment will be in established companies, because you would then have the fundamentals of the company, the earnings results for a few quarters at least. Majority of the new companies like IPOs, even if the first few days might be really bullish, they always have a bit of a lull after the initial hype. They create a base. They sometimes come down and go beyond the IPO price, create a U-shaped base, and then they break out. That happens to majority of the IPO. So the thing that got me back into the stock market was the Facebook IPO back in 2012. So there was a big hype. In that time, that was going to be the biggest company in terms of the dollar value as IPO. So that hype got me back into the stock market. I didn't invest in Facebook IPO or after it came back, but that got me back. I'm talking about Facebook because it then had crashed. It came up and opened and ended the first day at $46 or something. And the IPO base was about $18 or $20. Then it went up multiple folds, but it always kind of comes back. So it might give a better entry if you want to get into an IPO, to wait and see how the stock is performing, whether the company is kind of fulfilling its promises. If you wait for a few months, at least a few quarters to look at their results. Well-established companies reduces that risk further, because you know what you're getting into.
Okay, I think this has been answered, but Felvir asked, which platform do you use, if you want to share any more?
I have been using Interactive Investor so far. They charge a flat fee for getting in and out of the trade. They also have currency conversion charge. They also have monthly maintenance fee. So I'm looking for other options at the moment. I'm kind of exploring trading, so free trade, to just test out whether it fits my style. I might explore trading 212 as well. There are new platforms. Not all stocks are available in that. So I'm kind of exploring other options in order to try and limit the fee. Trading 212, I believe, doesn't have currency conversion charge at the moment, whereas I'm paying 1.25 or 1.5% or something of that sort in Interactive Investor every time I trade US stocks. So recently I sold a company stock for 8% profit. So I thought, only to realize in the pound value it was minus 3%. After taking the fee and conversion charges and things like that. So sometimes that happens. So far I'm dealing with Interactive Investor, but I'm looking at other options for better kind of fee structure.
Thanks. Nandlal asking, from your experience, how would you prepare for the next stock market crash?
Okay, so I watch my stocks, I watch my portfolio. There are some core positions that I have a high conviction in. So the stocks that I believe will do really well in 5 to 10 years. So that will probably stay put in my portfolio. And if it goes down, then I might add to it. Sorry, Simon, there's a bit of a noise coming from your end. But a lot of the companies that I have has gone up quite a lot in 2020. So what I'm doing is I'm keeping a close watch. Say if I invested 2% in that company, and because it's gone up quite a lot, if it became like 5% or 6% of my portfolio, then I kind of trim back a little bit, right? So there's no one company that will have a big impact on my portfolio if it kind of fluctuates. So I'm doing that a little bit, kind of taking some profits off the table and reinvesting in something else, so thereby compounding it, and also having mental stop loss around 50-day moving average, or in the overall picture of where that is. So I'm keeping an eye on that. Technological stocks, for instance, working from home has gone up quite a lot last year. So I'm keeping a short leash, depending on vaccine news and the economy lockdown. Whereas there may be some newer companies like healthcare that might be doing very well. So I'm watching like that. So I might jump a little bit from one trend to the other.
Thank you. And Tarun is asking about which newspaper or journals to read about day-to-day development and are more neutral. Tarun, I'm not sure. Are you asking about newspapers and journals to read to look for the shares? Tarun, are you here? Okay.
Well, generally the news about what market, to get the fundamental views about companies and how it is growing up, rather than Googling and going through the various channels, like just to keep abreast of the financial markets.
Well, we have FT in UK, isn't it? I mean, my initial response was, don't depend on the newspapers or TV channels. Was my initial response. Certainly not TV channels, because if it hits the TV news, prime time news, then that means that's the peak of that. So the last time the TV spoke a lot about Bitcoin was end of 2017 or beginning of 2018, which marked its top, and then it crashed a lot after that. It came back since, but that was the top then. So don't just go with the TV news at all. If you want to generally get an impression, various kind of different views, FT, probably I don't use any newspaper at all. I sometimes look at the IBD, the Investor Business Daily website. They have print version as well, I believe, if you choose that, or electronic aspect of it for a subscription. And they have some articles on the website that talks about market trend, whether it's uptrend or in correction and things like that. So that might give you a better taste of where it is going. So those are the things I kind of look at. If you go with the primetime TV channels, it just sensationalizes everything. Every dollar moves up and down, they're going to kind of inject their own kind of impression to that, and that's just going to skew you more. So I would stay away from that. But maybe if I haven't used the FT, so I can't talk too much about it. Sorry, that's not true. When I was investing in UK stocks, I did read a little bit of FT.com, but because I'm primarily doing US, I don't use that as much. But when I'm traveling, when we're in those historic times when we were traveling in flights, the airplane usually has FT, so I kind of go through that at times.
Thank you. And Amit is asking about some advice on financial advisor, that they're taking a lot of money without much of return. Do you have any experience with the financial advisors? Any suggestions? Anything further will be helpful.
That's why I don't use them. I tried a free session, when somebody kind of sponsors an event and they say we have a free session of discussion and things like that. So in the free session, they just took stock of what I'm doing, what my wealth is and things like that. And they spoke about having an estate, writing a will. Why don't you come to us to write this, create this estate planning and will writing and things like that. And I've read certain books that talks about how financial advisors sometimes are linked with various funds, and they refer those funds because they get a cutback from it, and they may not necessarily have your best interest in mind. So it is a big process to scrutinize and identify a truly independent financial advisor who does fee for service rather than kind of getting a cut from the referral process. Because the referral funds, you might trust him, but the fund may not perform very well because his account has been paid for the referral. So from various books I've read and what I've heard, I thought, this is my personal view. Okay, I thought no one other than me will have my best interest for my money. But but I do recognize if there is an access to independent financial advisor, they might have bigger knowledge than what I have on my own. But I haven't personally used one yet.
Thanks, Vinod. I think most of the questions have been answered, but Harvey has reposted the question about any website for the chart analysis and platform you use for US trading. I think he disconnected for a while, so he's asking on the same thing.
Yeah, so US trading, I spoke about the investing or invading approach, which is Interactive Investor and Free Trade. For swing trading, I use Interactive Brokers, which is a US company, but you can create an account from here. And they have $1 trade fee per trade. So buying $1 and selling 1.3 cents or something like that. You would miss out on the currency conversion nonetheless when you buy from GBP to USD and transfer back to GBP. But that's you can't get around that. That's a part of the game. But in terms of the fee, they charge 1p for trade. But to access the stock data, the real-time data, because you want to know how the stock is performing on a daily basis, you pay for that data access. So that's about $10 or $15 a month. Other than that, that's not much. So Interactive Brokers are really big company worldwide. So that's one I use. There are various others in US, but we don't have access to them in UK. So that's not relevant, I guess, for us. I use IB, Interactive Brokers.
Thank you very much, Vinod. And I will hand over to Vivek now.
I'll just highlight that I posted, copy-pasted the link to our Telegram group and GrowWealth page before. I've done a training session before to our members, and it's now accessible as an on-demand video on basics of stock charts. If people wanted it, they can gain access to that. Yeah, just wanted to say that. I'll paste the link again if people are joining just recently.
Thank you very much, Vinod. Thanks for your time and such an inspirational story for all of us.
Thank you.
Thank you. Please, Vivek.
Session, Vinod. Well done. Thank you so much for coming in and sharing the experience, knowledge, skills, life journey, psychology behind it, and how it has evolved you. And it's all about evolution. And that's what it's all about, because be anything you do, science, medicine, investment, any profession, or just pure spirituality, the bottom line, the end point is the same. How much have you been able to evolve, expand, and do something, and able to question yourself, challenge yourself, where you sit and where you are, and who are you competing with? Because the competition is only with self, and that is the best.